Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abasi. Good morning, Vimbai. Good morning, Rufai. Good morning to all our viewers. And, happy International Men's Day. Men are under pressure in this economy. It's not easy. So stay strong. Stay strong. Let's start with the oil markets, which picked up today. Remember, yesterday we're at $71. It's Brent crude at about 73 now. You're seeing West Texas Intermediate at 69.25. It's still based on geopolitical concerns. You saw what Defemi presented to you, what happened between Russia and the UK, but still the fundamentals are still weighing more on oil prices than the geopolitics. To Asian markets, positive this morning across the board in early Tuesday morning trading. You're seeing the Shanghai Composite Index in China, Kospi in Korea, which was buoyed by the Samsung announcement yesterday, the Hang Seng and the Kospi. In fact, the Hong Kong Monetary Authority is hosting an investment summit today. So you got Wall Street and other folks that are in Hong Kong right now for that particular summit. Now, even though Asian markets are up, we are still seeing outflows from exchange-traded funds, ETFs that are focused on China. In particular, two ETFs to look at. FXI is a symbol for a large cap China iShares ETF, which again, ETFs use a foundation to trade upon, right? So this particular ETF, FXI, looks at large cap China stocks, and they had an outflow towards the end of last week of $984 million, which is the largest that they've seen so far. KWeb is an internet-focused ETF, so it focuses on companies, like Alibaba, Tencent, and other companies of that nature. And so that also saw an outflow of about $710 million. The MSCI China Index, from its peak in October, has fallen 16%. So what's weighing on is still the same. Dr. Abati talks about this all the time, right? The property market issues, the deflationary spiral in terms of prices, and again, the Trump factor as to what impact tariffs will have. So you're seeing investors pulling money out. A couple quotes from Andy Wester. He's a portfolio manager at Sandia Investment Management. In case you are exposed to China, what do you do? Well, he's saying that Western investors in particular that were previously chasing momentum haven't seen enough near-term improvement in China growth numbers and government sentiment towards business. So again, that is towards the talk around give us more stimulus. The prime rates will get a decision on that tomorrow as to whether they'll cut it, although the markets think they'll keep it in place. And Andy continues. He says any immediate downside in Chinese stocks might be a tariff panic. I just mentioned that with respect to Trump coming in and his threat of putting 60 to 200% tariffs on Chinese goods. He says which may be warranted, that is, the panic may be warranted because of Trump coming in, although he says long term is probably a buying opportunity. So you've heard the term buy the dip. So with China stocks falling, there might be an opportunity to jump in. But again, that's if you're looking long term. If you're short term, you might be a bit skittish. And we get to in Brazil, the meetings that is taking place there with Joe Biden in Brasilia, what's his name? President Tinubu, Narendra Modi, and a G20 summit taking on. Here is Biden talking about the fact that he was in the Amazon, this was on the climate side, saying that you can grow your economy while also focusing on climate, and also that, and this maybe having a little dig at Trump, saying that the renewable energy path that the United States is on cannot be reversed.
I signed the most significant climate change law in history, a law that positions us to cut carbon emissions in half by 2030. This generated $450 billion in new clean energy investments. And that's created hundreds of thousands of good-paying jobs and a manufacturing boom as well. Folks, we don't have to choose between the environment and the economy. We can do both. We've proven it back home. It's no secret that I'm leaving office in January. I will leave my successor and my country in a strong foundation to build on if they choose to do so. It's true, some may seek to deny or delay the clean energy revolution that's underway in America. But nobody can reverse it. Nobody. Not when so many people, regardless of party or politics, are enjoying its benefits. Not when countries around the world are harnessing the clean energy revolution to pull ahead themselves. The question now is, which government will stand in the way and which will seize the enormous economic opportunity?
All right, so technology now. I think the big story of the day is a report from Bloomberg that the U.S. Department of Justice, this is under the present Biden administration, is going to ask a judge, there's a ruling coming up in April of next year, to get Alphabet to sell off Chrome, or rather get Google to sell off Chrome. Chrome is what, 65% of all web browsing activity. So it's the giant when it comes to market share. And essentially, they are saying that they want to pressure Google, or rather parent Alphabet, into selling off Chrome and then even licensing some aspects of the business in order to allow for more competition. So this would be a historic crackdown of the likes of what we saw with Standard Oil, or what we saw with Microsoft and the Office software. Now, just to remind you, we reported this back in August. Google was ruled to have an illegal monopoly on search, and we broke this down. So just to remind you some quotes, this is the judge that they're actually trying to, that they're speaking. Bloomberg is reporting they're speaking to. Let me just take you back to Judge Mehta and what he ruled back in August. He says Google is a monopolist and it has acted as one to maintain its monopoly. So that's Amit Mehta. He's a U.S. District Court for the District of Columbia. Also Merrick Garland, who is the current Attorney General. This is, again, his comments back in August when Google was ruled to be an illegal monopoly in search. He said this victory against Google is a historic win for the American people. No company, no matter how large or influential, is above the law. The Justice Department will continue to vigorously enforce our antitrust laws. So it looks like that is what is now the case. Of course, it may not happen, but even from this report, after hours trading, Alphabet shares are actually down on the news. Now, they have reacted. Here is Lee Ann Mulholland, who is Google Regulatory Affairs Vice President, reacting to the news. She said the Department of Justice continues to push a radical agenda that goes far beyond the legal issues in this case. The government putting its thumb on the scale in these ways would harm consumers, developers, and American technological leadership at precisely the moment it is most needed. Still on tech, going to Hollywood now. Ben Affleck, everybody should know Ben Affleck, Good Will Hunting, The Last Batman, actor, producer, and so on, was at a summit where he talked about the limits of AI, and particularly said that AI cannot write you Shakespeare. Here's what he said.
AI can write you excellent imitative verse that sounds Elizabethan. It cannot write you Shakespeare. The function of having two actors or three or four actors in a room and the taste to discern and construct that is something that currently entirely eludes AI's capability, and I think will for a meaningful period of time. What AI is going to do is going to disintermediate the more laborious, less creative, and more costly aspects of filmmaking that will allow costs to be brought down, that will lower the barrier to entry, that will allow more voices to be heard, that will make it easier for the people who want to make Good Will Huntings to go out and make it. Look, AI is a craftsman at best. Craftsmen can learn to, make stickly furniture by sitting down next to somebody and seeing what their technique is and imitating. That's how large video models, large language models basically work. A library of vectors of meaning and transformers that interpret context, right? But they're just cross-pollinating things that exist. Nothing new is created.
Not yet.
Yeah, not yet. And really, in order to do that, look, craftsman is knowing how to work. Art is knowing when to stop. And I think knowing when to stop is going to be a very difficult thing for AI to learn because it's...
Finally, I think Adefemi touched on this in one of the newspaper headlines, but to Nigeria now, the Electricity Regulatory Commission has put out a notice, or rather put discos on notice, saying that faulty meters should be fixed for free. Apparently, these discos are making customers pay for them. We talked I think it was last week, about how the power minister says we need $10 billion in order to get 24/7 power. The meter issue, there's still a backlog. We still do not have enough households with meters. It is integral to the electricity value chain. We're still not able to manufacture enough of them. We still need to get, importing. The government's trying to do what they can to get more imports. But until we solve the meter issue, until we can get everybody properly metered to know how much everyone is spending, Nigeria is still a long way away from 24/7 power.
A couple of things, Rotus. Number one, I think there's a big story making the rounds. The IMF is now saying that the reforms are not delivering growth, and maybe Nigeria should communicate better. Pretty much the conversation about the reforms is that they are not working. Not only in Nigeria, and a couple of other countries. So that's why I'm very ambivalent about IMF pills when we swallow them. They are not a path to redemption. And I also made a point yesterday, as regards February next year will be a year since we started tightening by the CBN. Inflation is still over 30%, 33.8% actually. So as regards all of this pain, this adjustment fatigue, like the IMF calls in their paper, it was a very wonderful report written by Emeka and Nieto. I don't know how the government is going to advise more. I don't know how the government is going to do it, that we're actually going to get economic gains rather than just the pain we'll be getting. As regards AI, Rotus, you and I know that Ben Affleck doesn't know what he's saying. You and I know that AI will write more than Shakespeare. With what I heard in the plenary session I went to, that Masayasha song was there in Saudi, I was telling me the next 10 years what AI will do that's already keeping money down for Ben Affleck, not sabi wetin they talk. I yield the floor.
All right. So very quickly to the G20.
One quick
ahead.
second, yeah. Forgive me. Forgive me. Just real quick, the IMF, though, remember, we had Catherine Patillo, who is the Deputy Director of the Africa Department at the IMF. She was on the Global Business Report, and they just released a report on reforms, and they did upgrade sub-Saharan Africa growth from 3.6% in 2024 to 4.2%. And on Nigeria, they have said, I mean, just to be clear, after this story before I was talking about, I will have to check on it, but the IMF's official position on Nigeria is that the reforms, yes, they are painful in the short term, but in the long term will put Nigeria on a better fiscal footing.
Okay, so thank you for that input. Now, I was going to comment on G20. Yes, that's right. And how so far the reportage around it has been that, Donald Trump is the elephant in the room. He's not there. He's not a part of it. But everything around, all the conversations are around the impact of, his expected policies, especially the tariff hikes. So we've seen Xi Jinping of China being particularly, aggressive and vocal. I believe he criticized those tariffs and said, well, you can't be in a small yard and have a high fence because big countries need to have big country-related policies. However, I'll summarize myself very quickly that there's an interesting analysis I read from a Chinese economist who was saying that these tariffs might be a blessing to China because China really does need to look inward again to figure out how they can boost their domestic consumption. So this might just be the trick that does it for them. I hope I can go into detail with that another day. I'll yield the floor to Dr. Abati.
Okay, yesterday I talked about Trump trade and how after getting a feel, you digest and then you return to normal. But it looks like Trump trade is still having its effect. There's a report that there was something about, self-driving vehicles, and that has gone in favor of Tesla and Elon Musk. The stock price of Tesla went up 5.6%, and that was also reflected in the NASDAQ index. Looks like Elon Musk and Trump, they are onto a good thing. Similarly, still talking about Trump trade and its continuing effect, we're told that Trump media is going to acquire significant interest in BACT. That is, cryptocurrency trading platform that is owned by the International Stock Exchange that owns the New York Stock Exchange. So cryptocurrency is also benefiting from the Trump effect. But the question I specifically would like to ask you, if you can answer briefly, has to do with Nigeria. A report from the Budget Office has just indicated that foreign debt servicing has gone up by about 177.7%, even when the Minister of Finance had told us that debt servicing has gone down up to about 65%. What are the implications for economic performance of Nigeria in the months ahead, and also for fiscal policies, as you have seen that the budget projections January to August 2024 will seem to have now gone askew? What is going on?
Yeah, so, I mean, even the IMF brought this up. The fact that a stronger dollar means that your foreign debt is going to be more expensive. So that puts a lot of pressure on the country, on Nigeria, to be able to ramp up revenues to pay that down. We talked about debts in the past. A lot of that increase in debt has to do with the devaluation of the currency. But also, if you look at the spending outlays for Nigeria, and that